Hi friends, welcome to the most expected paper of RBWM. This session I have prepared specially for you, which includes all the numericals as well as some theory questions. See, last time numericals were many. So this time also we are expecting around 25 to 30 marks of numericals. So follow this completely, share it with your friends. I have added numericals case studies over here. Okay, let's not waste the time. Immediately let's start. So a lending bank can source the credit score of the borrower from credit information agencies, information from the loan application, market information. So lending bank means the bank which is giving the loans. So this lending bank will source the information, will get the information from where? Either from this credit information agencies. Now what is credit information agencies? How many are there? Type in the comment section, everyone. We call it CICs. Okay, we call it CIC, Credit Information Company. There are 4 companies. Okay, which are those? Yes, everyone. First one you know, CIBIL, 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 right? First company is CIBIL. Everyone, type in the comment section. CIBIL everyone knows. What about the remaining ones? First is CIBIL, second one, yes, Equifax. Okay, Equifax. Okay, how many companies are there total? Total, how many companies are there for credit information? In the comment section, everyone. Type in the comment section, how many companies are there? 4 companies. Okay, 4 companies are there. 4. CIBIL, Equifax. Third is Experian. Experian. And fourth one is Highmark. Brief Highmark we call it. Highmark. So these are the 4 companies which are in this credit information business, CIC. All we have the CIBIL score. I'll show you. I'm having that report also. I'll show you that. Information from the loan application. That is also important. From the loan application, you can get the information about which are the earlier loans. Of course, customer can write bogus also in this, fake also, but you can get some idea. Market information, correct. From the competitor, from the known persons, you make visits. Whenever you are giving a loan, you will make visits to the customer's place, his office, his security, collateral security, wherever it is kept. So 4 places you make the visit. From there also, when you speak to somebody over there, you get some information. That is called as market information. So from where does this bank get the info? Does it get from A to C all, A, B, C, A and B only, B and C, A and C only? The answer is A to C all, correct? A to C all. Which of the following statement is correct regarding credit score? Correct. See this. The question is correct. Which of the following statement is correct regarding the credit score? It takes a snapshot of the consumer's credit report. So it gives you the brief idea. Snapshot means summary. Snapshot means summary. Summary of the customer's credit report. How many loans the customer has taken? What is the status of the loans? That is known as a summary. Through advanced analytics, it turns the information into a number. Means this whole history of that customer, how many loans has the customer taken, how many has he repaid, how many have become NPA. All this will be calculated and converted into a number. Okay, it's a 3-digit number. The score represents the amount of risk relating to a particular transaction. So amount of risk, depending on the score, you can definitely decide, right? So this score is what? What is this score? The score is minimum is, what is the minimum CIBIL score? Everyone. What is the minimum CIBIL score? Yes. Minimum CIBIL score is? Yes. What is the minimum CIBIL score? 300. Correct? It is 300. Maximum? Maximum is 900. 9. What is the good CIBIL score? 700. Good. Now it depends on, see, it depends on company to company. Minimum and maximum are fixed. Good CIBIL score depends on company to company. Some company might find 700 as good, somebody might find 800 as good, somebody might find 600 as good, depending on the customer base of the company. Okay? So what is the correct answer in this? It takes the snapshot through advanced analytics, converts it into number. It represents the amount of risk. So answer is all of the above. Okay? All of the above. Got it? See, this is the CIBIL report. This is what I wanted to show you. CIBIL report. Okay? If you see this over here, kindly note, you get consumer, you are able to see the details. See this. You can get it on Google also. It's not expanding over here now. Okay, so no, not expanding. See, there are two types of informations on CIBIL. One is static information, second is dynamic information. Static information means which never changes. Never changes. So which is the one which never changes? See, customer's name, date of birth, this will never change. Okay, name, date of birth, then personal details, address. Generally address will also never change. Generally I am saying. Then PAN number, Aadhaar number, that will never change. That is all static. First point on the CIBIL report is always, first remember, it is static information, static. Second is dynamic information. Dynamic means which changes. Now what changes? Dynamic. What changes in with any customer? See, what changes is the loans. See this. This will go on changing. What the loan which was over here, after next month it will be off. Some new loan will come in. So the data is always fetched. Okay, it goes on changing continuously. Okay, so this is known as the dynamic information. So static and dynamic, these are the two informations. Kindly note. There is also a third number which is always generated, that is called as control number. This question is asked in exam. Control number. Okay, control number is always asked in exam. Control number means this is the number which is generated every time you fetch a credit report. Every time. Okay, whenever you fetch a credit report, you'll have to generate a number will be automatically generated. Got it? Among the below given, which of the following is or are correctly matched on the basis of organized model? Now what is this model? Models are of 4 types in your banking. 4 types of models are there. Which are those? Horizontally organized, vertically organized, predominantly horizontally organized, and predominantly vertically organized. So these are the 4 models. Okay? Horizontally organized, kindly note. Horizontally organized, vertically organized, predominantly horizontally organized, predominantly vertically organized. These are the 4 types of models. Okay? Now one thing you note always, horizontally organized means what? You need to know these all the 4 models. Horizontally organized means basically the data is shared among the single product. Single product. Cross product data is not shared. It is product wise. Means home loan customers will be known to the home loan department only. Personal loan customers will be known to the personal loan department only. That's it. They won't be dealing with cross, they won't be doing it. Means home loan and personal loan. They will not share the data. That is known as horizontally organized. Vertically is opposite. Vertically means what? The data is common. Home loan data will be shared with the personal loan data will be shared with the credit card will share with the savings account. So all the departments will share the data with each other, common database. This database is known as customer wise. This is very important and this is very best. Customer wise. Why it is best? Because customer wise what happens? You just put the SIF ID. What is there in CBS now? Our CBS is basically based on the customer data only. You just put the SIF ID and you get the whole details of that customer. How many savings account is he or she having? How many loans is he or she having? Right? You'll get it everything in the same on a single screen. Right? So this is known as vertically organized, where you get the complete data of the customer in a single screenshot. Predominantly horizontally organized means what? This is like, these two are like the thoda sa pyar hua hai, thoda hai baki. Means these predominantly horizontally organized is near to horizontal. 30% the data is shared, okay, among various various products. 30% it is shared, 70% not shared. And here predominantly vertically organized. 70% of the data is shared within various products. 30% is not shared. So you got the 4 points. See, these are the 4 models. Now the question over here is, which of them is correctly matched? You want to match the following. Huh? So horizontally organized. Check this everyone. Functionality is provided across all the products. In this model, customer information is centralized. Okay? Vertically organized. Individual process platform supports one product only. Individual process platform supports one product only. One product. Okay? You want correctly matched. Predominantly horizontally organized model. Customer data integration is not available to a certain extent to other products. Is not available to a certain extent, means minor extent it's not available. Okay. Predominantly vertically organized model. Hybrid model that offers common information for most of the related services. Most. Maximum it's there. Not fully, but maximum. And about this, see, firstly let's go one by one. Horizontally organized model. So data is centralized. This is not the case, right? Just now I told you, horizontally organized model, the data is product wise. So individual process platform supports one product only. Now this, remember, these two are interchanged. Means this should be here and this should be here. Horizontally organized model means individual process platform supports one product only. Vertically organized model means functionality is provided across all the products. They are reverse of each other. So that's why these are not correct. You want correctly matched. PH, or just call it PH now. PH, customer data integration is not available to certain extent. Some extent it's not available. This is wrong. In fact, it is to certain extent it is available, 30%. Some extent it's available. So this answer is also false. These two are obviously false. So the correct answer is vertically. A hybrid model that offers common information for most of the related services. Most. Okay. So this is the true answer. So correctly matched is this. D is the correct answer. Predominantly vertically organized model, a hybrid model that offers common information for most of the related services. Read this. The models used for processing retail loan applications can be. So which are the models which can be used for processing the retail loan applications? Standalone and centralized model, standalone and standby model, centralized and standby model, hybrid and standalone model. What are these? Firstly, you need to understand these first. Standalone and centralized model. Okay, what is the answer? Firstly, you give me the answer. Which is the correct answer over here? A, B, C or D? The correct answer over here is this. Standalone and centralized model. What is the standalone model? Standalone model means what is the model? It means that number one, okay, everything means loan application. See, what are the steps in any loan? Any loan. The steps are: first one, application. Customer fills up the application. Okay. Before that, you have to contact the customer. That is also there in this loan process. Then after application, we do the analysis. We do the visits also. Visit to that customer. Right? Visits everything. Then sanction. Then disbursement. Disburse. Right? And then monitor this loan. So these are the basic steps, right? These are the basic steps in any loan, right? So if these are the basic steps, then monitor. Remember, standalone model means all these steps are done at the branch level. Branch. Everything is done at the branch level. Okay? Everything is done at the branch level. Second one, CPU model. CPU means centralized model. CPU. Under CPU model, kindly note, branch just acts like a courier person. All these steps, in fact this also, all these steps are done at the CPU level. Branch just acts like a courier person. It collects the document from the customer, passes it on. The central office will again, if it wants to give some message, it will give the message to this, right? Got it? Got it? So CPU, everything is done at the central office level. It depends on bank to bank. Some banks say at the branch level, this will be done at the CPU level. But generally, everything is done at the CPU level. Okay, only applications are sometimes filled at the branch level. Sometimes it can be directly at CPU also. Okay, so the answer is this: standalone and centralized model. An investor is looking for returns. Investor looking for returns in line with the market will opt for. So whatever this customer wants to get the investment with respect to market. Okay, market. So it is called as what? In line with the market. So it is called as active investment, speculation, passive investment and leveraging. What is it called as? Active investment, passive, speculation and leveraging. So it is always called as, kindly note, passive investment. Passive. Okay. What is passive investment? Passive investment means basically, I will just invest it in the benchmark indices and they will grow as per the index. Means Nifty Bs or Nifty ETS, ETF. That is a sort of your passive investment. Okay. So an investor looking for returns with the market will opt for passive investment. The one who wants to beat the market, will opt for active investment. If you want to beat you want the returns more than the market, then you will opt for active investment. Okay. This is there in your long-term capital loss can be set off against. So long-term capital loss can be set off against what? Short-term gain, salary, long-term gain and other sources of income. So a long-term capital loss can always be set off against long-term capital gain. Kindly note, long-term can be adjusted against long-term, short-term can be adjusted against short-term. Simple. Cash equivalent includes. Now, where does this term come? Cash and cash equivalent. It's a part of your current assets. Current assets. Okay? We have cash, cash equivalent, cash equivalent. Then you have debtors, debtors. Then you have prepaid expenses, prepaid, right? Prepaid expenses. And then you have, if it's a business, then you have inventory. Okay, inventory. Right? Out of this, 1, 2, and 3, these are also known as liquid assets. Liquid assets. These 3, cash, cash equivalent, and debtors. These remaining 2 are not called, no? Prepaid and inventory. They are a part of current assets, but not the part of your liquid assets. So, cash equivalent also includes stocks, debtors, furniture, bank. So, cash equivalent will include what? Means what is equivalent to as good as cash. Theoretically, I am talking. See, theoretically, debtors are as good as cash. Debtors are as good as cash. Because it's assumed that they will give you the money whenever you want. Assumed. I am not saying practically. Okay? That's why we are taking the debtors in liquid assets. Actually, debtors is the problem, you know. Debtors don't give you the money immediately. But theoretically, we consider as we have sold the material to them, so they will give you money immediately. Okay? Dash is a technique that not only accepts risk, but accepts the fact that loss might occur as a result of the risk. So, it accepts loss might occur, okay, as a result of the risk. So, what is it? Avoidance, loss prevention, loss reduction, and separation. It assumes that the loss might occur. Loss reduction, okay? It is known as loss reduction. Among the following, which of the following is issued for a particular purpose? Frequently, just one transaction. So, only for one purpose, what is issued? General POA, limited power of attorney, none of the above, all of the above. So, which one is issued for only one transaction? See, general it is general POA, limited it is limited POA. Okay? So, for one transaction, only limited power of attorney is issued. Dash is calculated by adding new debits for the month, previously unpaid payments and other charges. So, what is calculated? Amount due, minimum amount due, maximum amount due, negligible amount due. This is a part of your credit cards. Credit card. Okay? So, previous, see, whenever you calculate the due amount, the due amount is always calculated by adding new debits plus previous months, whatever are the unpaid previous months. So, and other charges, whatever are there. So, those are all added to calculate the amount due. Okay? Amount due. Minimum amount is separate. RBI says minimum amount due should be 10% of this amount due. Okay? It should be 10% of the amount due. Okay? Next one. Next one. A population of a town is 25,000. If it increases by compounding quarterly, then how much will it be? Will it have increased in a year? So let's take it 2 years. Simple. Because 1 year we have solved it earlier. So let's take it 2 years. Okay. So if it compounds quarterly, then how much will it be after 2 years? So now look at it. It is compounding quarterly. Quarterly means, see, R equals to R equals to whatever is given, 10% upon 4. N equals to 2 years into 4. Okay, this is what you have to remember. And the formula for this is your final population equals to C into present population C into 1 plus R raised to N. This is your population. C into 1 plus R raised to N. Okay? Kindly remember this. So C or P you can write it. P, present population. What is given now? Present population is given as 25,000. So P equals to over here. P I'll write it over here. So P equals to 25,000. Okay? And period is you know, R you know. So now let's solve this. What is this? 2.5%. Right? So you can write it as 0.025. Divide this by 100. 0.025. And this will be 8. So now solve this. So you want a population after 2 years. So that is equal to A equals to P. P is what? 25,000 into 1 plus R is what? 2.5. So 0.025. 1 plus 0.025 raised to N. N is what? 8. So solve this. 25,000 into, take this as, add this now. So 25,000 into 1.025 raised to 8. Okay. So that is equal to, do it now. 1.025 raised to 8. How to do it? See, it's like this. 1.025 into, press into, then equal to 7 times. 7 times. Okay, 1 less. So do it. Try it, everyone. I'll give you 1 minute to solve this. Try this, everyone. Yes, what are you getting as the answer? .025 into equal to 7 times. So what are you getting? I am getting this as this. If I do this 7 times, I am getting this as 1.218. 1.218. So what will I do? I'll take it round figure. So it's equal to 1.22. Okay? It's actually like this. Equivalent to 1.22. So this I'll do it. 1.22. So write this 25,000 into 1.22. Okay? Now multiply this. 1.22 into, what is the answer? 25,000. So that is equal to 30,460. 30,460. Okay? Or 61 you can say. 60.0. So 30,460. This is the answer. 30,000. Okay, kindly note this. 30,000. So 30,000 Kindly note this, everyone. It is 3. $30,460. Got this, everyone? This should be your answer. Okay? Got it? Next, similar one in a year. So this already we have done it. 25,000. You can try this again. You want quarterly and increase in a year, only 1 year now. So year n will be 1 into 4. So raised to 4 it will be. Check this, everyone. Okay? Next. Among the below given causes, which of the following comes under the category of challenges faced by retail banking? So which of them are the challenges faced by retail banking? Challenges faced by retail banking. Consumer protection and pricing, inadequacy of MIS, understanding the KYC AML issues, and all of the above. So, what is the answer for this? Check this, everyone. Yes, it is. Consumer protection. Is this a problem nowadays? Challenges faced by the retail bank, consumer protection. There is, because you do any mistake over here, immediately the customer goes to consumer court. So it is there. Adequacy of MIS, is it there? Means you have such a big population that the MIS becomes short now. Every day the population is increasing, the customer base is increasing. So that's why. Understanding the KYC AML issues means if you do any technology, the one who wants to rob you will be one step ahead. He'll find the loopholes. So this is also a problem. So all of the above is the answer. All of the above. Okay, got it? All of the above is the answer. Given below are the statements labeled as assertion and reason. From the options given below, choose the correct answer. The EMV technology brings more security to card and mobile payments. The information transmitted in the card is encrypted and tokenized. So EMV technology brings more security to the card. Think. Yes? Yeah? Does it bring you more security? What is EMV technology? EMV. Yes? I'll give you a hint. It is a name of 3 companies. It is a name of 3 companies. Okay? It is a name of 3 companies. Can anyone give me the name? 3 companies. It is, the 3 companies are, we have done this earlier. Europay, MasterCard, and Visa card. So that is known as EMV. So EMV technology gives you more security to the card and mobile payments. So that is right. And next one, reason, the information transmitted in the card is encrypted and tokenized. So that is also right. So both are correct. Right? So A and R are true and R is correct explanation. A is the answer. Okay, both are correct. R is also the correct explanation. In which of the following ways artificial intelligence has been introduced in ATMs? Machine learning for cyber security, forecasting ATM cash demand, voice recognition of the customers. So all of them, machine learning, forecasting ATM cash, voice recognition. Yes, is it 1 and 2, 2 and 3? See, voice recognition, if you say no, there is a problem in voice recognition. Why? Because there can be dummy voices. So that's why this will always create a problem in the banks. Machine learning, agreed. Forecasting ATM cash demand, agreed. So 1 and 2 will be the answer. Okay, 1 and 2 will be the answer. Which of the following can incorporate artificial intelligence at the front office, mid office and back office? Who can incorporate this AI in front, mid and back office? Cash deposit machine, AI based algorithm, big data applications and bank stations. Bank station means basically bank branches. So who can apply this AI? Of course, bank branches, right? Bank branches can use AI in either front office, mid office or back office. In which of the following ways AI can predict and prevent possible security breaches in retail banking sector? So AI can prevent possible breaches. Anomaly detection can be used. Tailored products can be offered to the clients. Capturing documents, data using OCR and then using machine learning AI to generate highlights. Suspicious behavior, log analysis, spurious emails can be tracked. So, where can AI be used? Prevent possible security breaches. See, suspicious behavior, logs analysis, spurious emails. These can be done. In fact, the answer should be E. E. Yeah, all of the above. Okay? Because all of them can be used for to prevent the security breaches. Okay? All of them can be used. The natural language technology can process queries to answer questions and find information and connect users with the banking services, eliminating language barriers. This reduces human error, systemizing the efficiency. Which of the following AI-enabled technology is mentioned here? So here what are we doing? Finding information and connect users with various banking services, connecting the users with various banking services. Eliminating language barriers. Even the language barriers are gone. So this reduces the human error. Okay. Which of the following AI enabled technologies use blockchain hastening payments, smart wallets, voice assisted banking and underwriting? Yes. See, there's a hint over here. What? Connect users with various banking services, eliminating language barrier. Here we are talking of language. So language, when we say, it's related to voice assisted banking. Okay, voice assisted banking. Which of the following is or are not the desirable behavior to be adopted by a branch head as a part of increasing branch profitability? Not, kindly note, the question is not a desirable. So she is required to be nice and appreciative for all the branch staff. There should be proper reward appreciation for the good workers. Punishment system should not be followed to the erring employees even if they do not improve their by persuasive means. So not a desirable. So not a desirable. She requires to be nice and appreciative to the branch staff. There should be proper reward appreciation for the good workers, and punishment should not be followed for the erring employees even if they don't improve. So that is wrong, isn't it? So you want not. So this is the answer. Only 3. A is the answer. Right? A is the answer. You are given the statements labeled as assertions and reasons. From the options, choose the correct answer. So current account, saving account, CASA. Deposits are very important performance indicators to increase the profitability. So CASA is very important indicator. Is it so? So you can directly say that A is correct because CASA is the base of any banking. So if CASA is the base, this is correct. So this is true. The rate of interest paid to the customers where the bank on CASA deposit is very low. That is also true. So is CASA the correct performance indicator? See, A and R are true. Now the only thing which you have to say is whether the reason is correct for the statement. Both A and R are true. So that is obvious. Okay. So the option is between A and C. R is the correct explanation, R is not the correct explanation. So CASA is the performance indicator and rate of interest paid on CASA is low. So that is true. A is the answer. Both A and R are true and R is the correct explanation of A. Simple interest on a certain principal for 3 years is 225. Compound interest on the same amount for 2 years is 153. Find the principal and the interest. Now the simple interest concept, we feel that we know simple interest very well. But actually we don't know simple interest to that extent. We don't understand it. We have learned the formulae, but we don't understand simple interest. Even compound for that matter. So now, let's see how many of you can solve this. Try this, everyone. Try it, everyone. You need to understand the concept of simple interest. See this, simple interest means it's every year it is always same. See, SI, every year it is same. Kindly note this basic line and very important line. Every year simple interest will be same. This is what you have to remember it by heart. Compound interest, it will change. Every year it will change. First year both simple interest and compound interest will be same. Kindly note this also. First year SI equals to CI, compound interest. For yearly compounding, I am talking for yearly compounding. If I am doing a yearly compounding, then first year simple interest and compound interest will always be same. Okay? So now, every year it is same. First year simple interest and compound interest are always same. And compound interest is what? Compound interest is interest on interest. Very important part. You all will say, sir, we know all this. Then solve the problem. Are you able to solve it? Okay. CI equals to interest on interest. These things we have learned. Kindly note, we have learned this. We don't understand this many a times. Okay, we have learned it. Compound interest means the interest on interest. Means what? This problem will clarify all the doubts in that. This problem is asked for 2 marks. Kindly note, 2 marks. Okay, definitely it is asked for 2 marks. It's not a 1 mark problem. Okay, all the 3 concepts will be verified over here. All the 3. So, simple interest. What is given? Let's write it. Simple interest and second one is given as compound interest, right? What is given? Simple interest for 3 years is 225. For 3 years. Okay. So we'll write it here also here. Here. 1, 2, 3. Okay, 3 years I have written. Simple interest, total simple interest for 3 years is 225. 225. Simple interest for 3 years is 225. Now kindly note, what did I tell you first? Every year it is same. So if every year it is same and total is 225, then what will be the simple interest per year? What will be the simple interest per year? It will be 225 divided by 3. So that is equal to 75, right? So 75. 75. Okay, 3 years 75. So you got it 225 over here. Now compound interest. What is given? Compound interest for the 2 years is 153. So total of this is 153. Okay, this compound interest for 2 years is 153. But what did I say? For first year, simple interest will be equal to compound interest. So simple interest and compound interest are always same for the first year. So this is 75. So this will be 75. What is my total? But 153. If total is 153 and first year is 75, what will be the second year then? 78. So 78. So 78 will write it like this, 75 plus 3. See, what did I say? All the concepts will be tested over here, all of them. These are the basic concepts and we have learned them, by-hearted them, but we don't understand them. First one only, many of you got caught over here, this concept, right? Sincerely tell me, how many of you didn't understand, didn't get this earlier? Before myself teaching you, before this numerical. Because you have learned it, that simple interest is same, but we don't apply it. Application is important, isn't it? Similarly the second one, simple interest equals to compound interest. We know this, but did we apply it over here? That is important. Type in the comment section, whatever you want, whatever you feel. You know you have got something new. Have you got something new over here? Type yes in the comment section. Okay. So 75, then 78, 75 plus 3. Now this third part will be checked. Interest on interest. Now what is this 3 rupees? See, 75 was same over here. Next year also I should have got 75 only. But I got 3 rupees extra. Why? Why this 3 rupees extra? This 3 rupees extra because this 75 interest was invested for 1 year. So this 75 invested for 1 year. I got the answer is 3. Interest is 3. So solve this. So 3 equals to PNR upon 100. See, which is the formula you will be using? PNR upon 100. PNR upon 100. Okay. What is P over here? I have invested 75 rupees, right? I have invested 75 rupees. Okay. So my P will be over here 75 into N is what? 1 year into R is what? R divided by 100. So 3 equals to 75 into 1 into R upon 100. Got it? So now find it R. Find R. Multiply this 100 on the other side. Divide it with 75. So you get R. So R equals to, what is this? 300. 300. I'll directly write it. Upon 75. 300 upon 75. Got it? Everyone getting this? Type yes in the comment section if you are getting it. 300 upon 75. So that is equal to what? 4. So R equals to 4%. See, you got one answer. Interest. Interest is 4%. You got this. What about P now? For find, see, you want two answers. Principal and interest. How to find out P then? For finding out P, what you have to do is use the same formula again. Okay, but this time 3 equals to this interest equals to PNR upon 100. Use the same formula, but this time use interest as 75 rupees. Now you look at it. Suppose if I write it like this over here. 75 equals to 75. What is this 75? This 75 is the interest for the first year. This. How did I get this 75 rupees interest? I invested something for 1 year and then I got 75. Clear? So what is that something? That I don't know. Let's keep it like that only. So P into N for 1 year. 1 into R. R is now, you got it 4%. 4 upon 100. Getting this? P into 1 into 4 upon 100. So solve it now. You've got everything. 75 into 100 divided by 4. So P equals to 7500 divided by 4. Right? 7500 divided by 4. So it is coming out to be, solve it everyone, 18 I think so something. 18 for the 72, right? 30 remaining, 1875, right? So the principal is 1875. This is your principal. Got it everyone? R also you got it 4%. P also you got it 1875. This is how you need to solve it. Kindly note, whenever you are solving these numericals, you need to have your concepts very clear. All the three concepts over here regarding simple interest and compound interest, everyone amongst you knew it. But what was lagging was application. Right? Clear? Chalo, move on. You save 1000 at the end of each year for 10 years and earn 8.5% interest per year. How much will you have at the end of 10 years? See, this is annuity problem. Kindly note, there are two types of problems. One is this earlier one which we saw, invested once and then getting the amount at the end. Annuity means what? Every year I am investing. This you might have had it in your accounts also. So how to solve annuity? For solving the annuity, you have to use different formula. What is the formula? The formula for annuity is how much you will have at the end of the 10 years. End. So end means what? After 10 years, what amount will you have? So look at this problem is like this. I go on investing what rupees 1000 at the end of each year. So 10 years, okay? 1, 2, 3, forget all this. So you can mark this. So every year I am investing, putting 1000 rupees. I am putting this for 10 years. Now what will I get at the end? At the end, what is my amount? That is the question. What is the amount at the end? ROI is given, rate of interest is 8.5%. Period is also, 10 years. So now we will have to use future value formula, not the present value. There are two formulae in annuity. One is future value, second is present value. Annuity is also of two types, ordinary annuity and annuity due. Whenever we invest at the end, it's called as ordinary. Whenever we invest at the beginning, instead of this end of each year, it would have mentioned beginning of each year. Then it would have been annuity due. But here it's mentioned end. So end means which formula will you use? See, the formula to be used is I'll write formula over here and then directly I'll write the answer. Means solve that. So C equals to, or F equals to, not C, future value you want. So future value F equals to C into whatever I invest per year. C means what? 1000. Whatever I invest per year into 1 plus R raised to N minus 1 the whole upon R. I want only future value now. This is the formula for future value. Formula for present value is different. Okay. So now you will be using this formula. What is C over here? See this. C. C means every year what I invest, 1000. What is N over here? N equals to 10 years. What is R over here? R. R equals to 8.5%. So that is equal to, solve this first, 0.085. This divided by 100. So 0.085. Now use this and find a future value, because this is what you want. At the end of 10 years, how much will you have? Now solve it, everyone. Try it. So F equals to C into, what is C? 1000 into 1 plus R. What is R? 1 plus R. What is R? 0.085. So 0.085 raised to N, 10 divided by R, 0.085. Solve this now. Solve this. 1.085 raised to 10. This will become 1.085 raised to 10. How to do this? Take it like this. See, I'll put a square over here. So 1.085, then press into, multiply. See this, press into, multiply, then press equal to 10 times. 10 times. Then you will get the right answer. 1.085 into, then equal to, go on pressing it on that black calci or your normal commercial calci. You are not allowed to use scientific calci in your exam. You are not allowed to use scientific calcis in your exam. So you'll have to do the practice on commercial calcis only. Okay? So now let's try this. Everyone try it. Let me also try it over here. Yeah. What is the answer? Let's see. 1.085. 1.085. 85. Okay. 85. 1.085. Right? Yeah. Into equal to, do it 10 times. Okay. So what are you getting? Are you getting this answer as -1? -1, did I write it? -1. This was remaining. -1. Correct. -1 was remaining. Okay. So get the answer. It is 1000 into, what is it? 2.26 minus 1 upon 0.085. Now solve this. 2.26 minus 1 means 1.26. Okay. So solve it. Minus 1. 2.26 minus 1. So 1.26, you are getting it over here. Divided by 0.085. 0.85. What are you getting? 14.83. 14.83, you are getting this answer. So it is, I'll write it over here, 1000 into 14.83. So that is equal to, multiply this with 1000. So 14,830. This is the amount you will be having at the end of 10 years. If you are getting an interest of 8.5%, for 10 years you are investing 1000. So roughly you will be investing how much? You will be investing 12,000, right? And what are you getting? 14,830. So you are getting 2,830 extra. Okay? You are getting 2,830 extra. Got it, everyone? Clear this concept? These two numericals are surely there in your RBWM paper also. Remember, this time May 25. Numericals for heavy, May 25. Okay. Every year they are heavy now. Every year they are asking numericals. Okay. So don't leave any of the numericals. Okay. Now you want to save 2500 per year at the end of each year for 5 years and earn 8.25% interest per year. What is the present value of this annuity compounding half yearly? Time value of money. Time value of money. Very difficult one. Frankly, it's very difficult. You have to find out the present value of this annuity compounding half yearly. Now, this question is there in your AFM also, accounts and financial management, and RBWM also, both these. What is the formula for present value? Formula for PV is like this, PV equals to C into 1 plus R raised to n minus 1 the whole upon R 1 plus R raised to n. See this. Now specifically it's mentioned at the end of each year. At the end of each year means what is this annuity? Just type in the comment section. Is it ordinary annuity or is it due? Is it ordinary annuity or is it due? Type in the comment section. Yeah, it is. Let me see how many of you are typing it correctly. Is it ordinary annuity or is it due? Ordinary or due? Ordinary or due? Kindly note, at the end of the period means ordinary annuity. End, correct. End means ordinary. Okay, and if it is at the beginning, then it is due. What do you have to do to find it for due? Just multiply this with 1 plus R. If it is due, multiply it with 1 plus R. For ordinary, simple this much. Okay, so now you know this, I'll remove it. Okay, this part I'll remove, this part I'll remove, this part I'll remove because you know this. So let's move on. So now find the answer. What is the answer for this? C into what is C? You want to save 2500 per year. Now 2500 is per year. Pay attention. Per year at the end of the each year. Okay? Or each period you can call it now. At the end of each period. For 5 years at interest 8.25. What is the present value if compounding half yearly? Compounding half yearly means what? Whenever you have half yearly, half, everything is half. R equals to half. What is R given? 8.25. So 8.25 upon 2, whatever this answer is. 4.125? 4.125%. 4.125%. But n is reverse. N equals to, whenever you divide anything by R, multiply the same number by n. So n is given as what? 5 years. So 5 into 2. So that is 10 years. 10 not years, 10 periods you can call it. It's not 10 years. So write it everything. What is given? Let's write it below. C. What is C? See, per year I want to save. Again, so per year is 2500. So half year, how much will I save? I'll say 1250. Yeah. Divide this also by 2. Actually, in exam, if it is given, if I want to save, only this much is given, not per year. Or per period, per 6 months. If it's given per 6 months, then you have to directly take 6 months. Let's take that only. So per 6 months. Okay. Per 6 months. Okay. 6 months. So directly take 2500. If it is given per year like this, or let's take whatever that question is. Okay. So if it is given per year, Okay, in this case, what will you do now? In this case, you will divide this by half. So 1250 into every 6 months I am investing 1250. Per year I have to invest 2500 into what is 1 plus R? 1 plus what is that? 4.125? 4.125 upon 100. So I'll directly write it now. See, R is to be taken as it is in percentage. Percentage means divided by 100. So directly you can take it, isn't it? Instead of writing, means now you all know this, right? How to write this. So instead of wasting the time, you'll directly take it 0.04125. The whole raised to n is what now? N equals to 10. 10 minus 1, the whole upon. What is R? 0.04125 into what is 1 plus R raised to n? Same figure. I'll directly write it now. 1.04125 raised to 10. Directly I'll write it over here. Everyone check this again. Everyone check this again. Everyone check this again, because this is not that simple to understand. C into 1 plus R raised to n minus 1 upon R into 1 plus R raised to n. It's not that simple. Okay? Now do the calculations. Those are still tougher. You don't get, these are 2 marks questions. You don't get it like that, only 2 marks, isn't it? So, first solve this, 1.04125. How will you solve this? Raised to 10. So, write it like this, 1.0, I'll show you, see this. Write it like this, see, I'll show you over here. 1.04125 into, then press equal to 10 times. See this, everyone. 1.04125 into, then equal to 10 times. Do it, everyone. And write this answer separately. This answer is to be written separately. Kindly note. Don't do in a hurry. Go forward. Okay. So 1.04125. Okay. Raised to 10. You do in raised to into equal to 10 times. 10. So it is 1.498. This is 1.498. So I'll write it over here. 1.498. This is the answer for 1.04125 raised to 10. Now it's simple. See 1.498. So 1250 into 1.498 minus 1 upon R is 0.04125 into, now this is what? This is the same figure, 1.498. Now this you can do it directly. Try it, everyone. So 1.498 minus 1. 1.498 minus 1. Okay. So that is equal to minus 1. So 0.498 this one divided by, pay attention, this part 0.498 divided by, do this, divided by, what is it? 0.04125. So 12.07. This answer is, see, I'll write it over here. 12.07. Shall I write it separately? 1250 into 12.07. Sorry. It is 12.07 divided by this answer, 1.498. Now get the answer. Divided by 1.498. Everywhere keep the habit of writing. Everywhere keep the habit of writing. So it is 8.06. So 1250 into 8.06. Now get the answer. Into 1250. So you're getting it as 10,076. Okay, 10,076. Got it? So 10,176. 10,076. Got it, everyone? 10,076. Okay? For 5 years. Got it? Let's check this again. Let's check this. So what is it? 1250 I am investing every 6 months, right? For 10 periods. Correct. So try this, everyone. Try this. 1.04125. Is this right? 4125? 4.125. 8.25 upon this. Yeah. So 1.04125 raised to 10. Raised to 10. Yes. 1.498 correct. Minus 1. So that is 0.498. That is also correct. Divided by this 0.04125. Divided by 0.04125. So 12.07, that is also correct. Divided by 1.498, what is it? 498, correct? Yeah, 498. So that is equal to 8.061 into 1250. 1250. So 10,000 something, right? 10,000 something you are getting. Correct. This is the answer. Are you getting this, everyone? 10,000 something 76. Now, some of you might think now that, sir, give me a simple logic. Give me a simple logic. What is the logic? That I'm investing 2,500 per year for 5 years. So that figure only becomes what? That figure becomes what? 2,500 into 5. So 1250. Minimum I must get that. What am I getting? 10,000. How come? My value should be higher. Kindly note, we are calculating present value. We are not calculating future value. If you are calculating future value, then the figure will be different. This is present value. Kindly note this. This is present value. Now, if I get the same question for future value, then what will I do? If I get the same question for future value, so what should I do now in this case? If I am getting the same question for future value, yes, what should I do? Let me show you. Let me bring in the new slide now. We'll solve this once and for all, so that you get full clarity on this. Let's take some time, but let's keep the concepts very clear. Here, this is the present value of the amount which I am getting. Now, what about the future value? Future value over here is, future value formula is same as that of present value. Only a slight change is there. Future value equals to, say the same, C into 1 plus R raised to n minus 1 the whole upon only R. Only R. That is the only difference. 1 plus R the whole raised to n minus 1 upon R. That's it. So now what happens? Try this, everyone. Again I am doing the same thing. 1250 into, what is 1 plus R raised to n? This we have already found out. 1.498, right? So 1.498 minus 1 upon, what is R now? R is something different. R is what? 4.125%. So it is 0.04125% means divided by 100. Now get the value. Now you will get the value more than 1250. Try this everyone. So 1.498 minus 1. So it is equal to 1250 into 0.498 divided by 0.04125. So do this everyone. So 1250 into what is the answer for this? It is roughly 10 times. Right? Roughly it is 10 times. So you must get it around 10 point something. Isn't it? So let's do this. Who's getting the answer? 0.498 divided by 0.04125. 12.072. Are you getting this? 12.072. Everyone? Are you getting this? 12.072. 12.072. Get the answer. Multiply this. What are you getting? What are you getting? 12.072 into 1250 into 1250. 15,091. 15,091. 15,091. This is the future value. This is the future value. Okay? Kindly note, present value and future value. These two things are different. In accounts, you might be having this. You might have done this, but it's a revision for you. You get the same question in accounts also. You get the same question in RBWM also. Kindly